Hi, everybody. Welcome to the weekly Delphian meeting. Josh is on vacation this week, so you're stuck with me, but thanks for joining. To get, as usual, a number of charts I'd like to go through, and then certainly open to all questions and points of conversation. And, welcome back after a couple weeks off. I guess shortly after our last meeting on the 27th, we had the debate on Thursday the 28th. Certainly a lot of fireworks, in the political arena with that debate, but no fireworks in the marketplace. As I go through the charts, we'll see. I mean, you had a little bit of a range, in the markets that Friday, but really, not much to talk about. So I think, as we go through the charts, last meeting I was talking about, where can we find leadership? And they're kind of the charts I want to go through today. I don't really necessarily have an answer to where I think it will be. As I look forward, I tend to think the market's going to do more of the same, and that's a slow, steady slog upward, with, little hiccups, maybe 2 and 3% pullbacks from time to time leading into the election. It wouldn't shock me if the market, kind of, as I said, continues to move higher, but kind of develops a bit of a range over the next few months, 4 months leading into the election, and then kind of, breaks out after the election. That's assuming that earnings are good, and I think that earnings, certainly everybody expects earnings to be excellent, somewhere in the neighborhood of, certainly double-digit increases this year and 14, 15% next year. And I don't think there's any indication that, at least at this point, that we're not going to have strong earnings. Some of the headlines I've seen over the last few days, there have been fewer earnings revisions down into earnings season, which starts in earnest on Friday with the financials. Fewer downward revisions than the analysts typically do going into this quarter, suggesting I guess some pretty good numbers are coming. And again, they start in earnest on Friday. As I look at the home page, nothing jumps out at me in terms of, extremes. I mean, how about that green pie? A whopping 42% bullish, suggesting, from that perspective, there's a long way to go. And, as we look at the Dow chart, which I'll pull up, the Russell chart, we're just kind of sideways. And I think, with the exception of some concentrated leadership, we'll probably get more of the same going forward. One small change, in the sectors, basically you got, the material section going into stage 4 yesterday. That was, really the only change in the last day. As it turned out, again, doing some homework, according to State Street, the materials and what was it? Maybe communication sector, but definitely the materials may be, one of only 2 sectors have negative earnings quarter over quarter. So, sort of suggests that thing's kind of been a bit of a downward tilt, and I'll have that chart, in a little bit. So as Josh likes to do, just market pulse. And as I analyze, the market pulse data, it just, that black line is the S&P, and we continue to churn higher, even with, more bearish states. And really, we're just, kind of slogging along with an upward bias. Nothing spiking in terms of the highs or lows. It's just kind of a slow, steady positive market to the upside. Moving averages. You got more issues below moving averages than above, but at the same time, the market just from an average perspective, continues to head north. So I mean, bullish and bearish state totals. Again, more bearish, but that hasn't slowed the market. So I think we'll see how long we coil. We'll see what these earnings look like. But whatever the impetus, I think, and maybe it is, the day after the election, it wouldn't shock me if we've got another very healthy leg coming in the market, but that's a long ways off. Before we get into, the charts, I just thought I'd pull up, a few things. And this really is another reason why I think the market may just continue to slog along with an upward bias. Here's the inflation numbers, and you've heard Josh and I refer to this Trading Economics website, which can't say enough about. So many layers of data, and the fact that it's all out there free of charge continues to be mind-blowing to me. But here is our inflation rate over the last year. I think the pictures always are, make a compelling story, and things basically are awful quiet. We're inside of a 3 and 4% over the last year. So, constructive. Here's core inflation, which of course excludes food and energy, and just slow, steady down. Those numbers come out tomorrow and Friday, and no reason to think that there's going to be any unwanted surprises on the inflation front. Last thing I wanted to pull up from Trading Economics was just here's the lumber chart, and this is over the last 6 months. Not a surprise with the hint of a somewhat slower economy. That lumber, which had been spiking higher, obviously a couple years back, and then kind of sideways and just over at 500, 550 range. Has really fallen out of bed in the last few months. And just to give a little more perspective, there's the 10-year look at lumber. So kind of falling back into some pretty good support, but a lot of movement over the last couple of years in lumber. Might be worth also just keeping an eye on that. If that thing starts to reverse, it'll be interesting when the Fed finally starts to cut rates to see whether there may be some sign that new home starts may pick up, and this be a good chart to keep an eye on. So here we go with our charts. Just like to keep an eye on interest rates. Obviously, a lot of signals very similar to the XLF. We've been just in terms of a lot of different signals. State changing. One of these days we'll get to talk to Ashok. He'll spend some time, taking a look at this. Why so many signal changes in a short period of time is something that we'd like to clean up if possible in the months ahead. Speaking of XLF and overall potential market leadership, we talked about this a couple of weeks ago. Nothing new. It's sideways. What's going to be new is the numbers that start coming out on Friday. And I was surprised, maybe I shouldn't have been, but I was surprised that the earnings numbers in Friday, we've got JP Morgan, Wells Fargo, Citigroup, Bank of, Mellon Bank in New York, all Friday. We've got Goldman Sachs and BlackRock on Monday. And, you can see will we be able to break out the new highs? I think we're going to have an awful good chance, or we're going to know by Monday whether this thing's going to break out and potentially, the financials give us some leadership. So, but getting back to the numbers, JP Morgan, they're looking for a reduction in their earnings. They're looking for about $4.14 a share on $41 billion in revenues. That's down, from the previous quarter. So I don't know if there was a one-time gain, but last numbers, they're comparing the 414 to our 498. But I'll pull up the JP Morgan chart. So 414 is the number there. Wells Fargo, real close to the previous quarter, looking for $1.28 versus $1.25 previous. Citi, same thing, looking for $1.40 versus $1.37 previous. Revenues are not really expected to change much with any of these financials. Here is JP Morgan, and it was a hell of a state one coming out of the low in October, and we in the state one just for a little period of time. So looking at a breakout in JP Morgan, and I think we'll know Friday or Monday whether this thing is off to the races. But interestingly, we're banging up against targets, and so whether that turns out to be resistance, we'll know in a few days. I pulled up a few of the other banks. Citi just went into state one a couple days ago. Looks like very healthy day yesterday, and looks like it may have room to run. So going into the earnings, looking very constructive. Wells Fargo, not dissimilar, kind of trading sideways into a recent state one as well. So the internals based on the algos suggest that maybe we're looking at these things breaking out to the upside, which would be very constructive leadership for the market if we're to head north. Goldman Sachs, I think, we referenced that going back a month or two ago. Goldman, does offer some pretty deep insights into all the finance. Obviously, they make a lot of money when deals are coming to the table, and this may suggest that their earnings are Monday. I'm not certain what they're looking for, but I know the numbers, come out on Monday, and certainly looks like they are ready to break out as well. So these financials are just, sitting here at highs. Some of them, recent breakouts, and we'll see next week whether they are going to maybe be the leadership for the next leg of the market. Although personally, I'd be surprised if we're going to get anything dynamic to the upside. Again, I think just kind of a slow, steady slog going into the election. Here's BlackRock. It's quite different from Goldman, sideways, and they also in state one now. So just over the last couple of days, most of those that just roll into state one obviously have plenty of time before to stay constructive and remain in state one. So leadership, and what had me think about the insurance companies is that a stock that I used to trade years ago, Progressive Insurance, their earnings are Thursday also, and we've all seen our insurance rates go absolutely berserk, and I just thought, well, also in the financial sector, obviously, when I went in, this is an insurance ETF. A lot of the names, frankly, that are in this thing, they're not big time Wall Street names, but the sector in general also had a very good run coming out of the October lows and has been sideways. So KIE is the symbol. Little change of pace here. State two, it's been in for a little while, but hasn't pulled back at all. I think this could be one. You got a trend line across those tops also. Might be worth keeping an eye on this, and whether PGR, which I know we've never pulled this chart up before, looks an awful lot like XLF. This thing is looking for big earnings. State one, for a little while, just kind of laying sideways, I think, waiting for earnings. Last earnings it had basically, hasn't done much out of that, but, the estimates that I saw, they're looking for $2.10 versus 40 cents previously. So again, whether there's a special charge or something like that, I'm not quite sure, but, maybe, something as innocuous as PGR may give us a little insights to the direction of the market over the next few months. And their earnings, as I say, they come out tomorrow. Another area that obviously has been leadership, and apologies for the NDX not being in the home page. There's a data blip there. We're trying to get that squared away, but I figured I'd pull up the Qs instead and, just look at the tear that this thing's been on. What we're coming up to, and, we're always talking about average days in our, various states. We're banging up S&P in NASDAQ, to the average number of days. We can exceed that by a long way, but, the move, we, basically blasted through target 3, pulled back to it and off to the races again. And I pulled up some of the individual charts just to see where that strength's coming from, but there's no let up. And most of these earnings, with the exception of Microsoft, are a ways off. Microsoft earnings are going to be the 23rd of July, so not too far off. A lot of the others are out into August. So, I think these are going to remain strong, but I don't know that they will continue over the next, month or so to be the actual leadership in the market. Kind of thinking a number of these are just going to, basically trade in a range. One that certainly hasn't is Apple. And, it'll be interesting to see. I think 234 is the target 3 in Apple. We're a couple weeks away from, the average period of time. We're right up to the average move at just shy of 19% right now. And when I went in and looked at Apple, I pulled up, I was looking at it from a Fibonacci retracement level. And, I had come up with a target of like 237 potentially. I mean, it's not that far from there right now. We closed at 228, 237 on a symmetrical ABC is what I was looking at. And, coupled with the 234 target 3, maybe we're going to get some resistance in Apple in the 235, 240 range. Earnings aren't until, the 1st of August. So, we've got some time there. So I think at some point, Apple, like a lot of these things that have run, and, we'll pull up the NVIDIA chart, they're going to back and fill for a while. And whether they back and fill into November, remains to be seen. Here's Microsoft. And I thought, yesterday's candle, may have been significant, almost a bearish engulfing candle. Not quite, but, it's up today. So I think Microsoft, which, as I said, their earnings are a little sooner on the 23rd. I think if I had to pick any of these stocks, this would be the one I'd keep my eye on in terms of the techs to see whether or not, we're going to pull back maybe to, that target 1 down at the 442 level. It certainly is due for a pullback, but that's the one I think more than any is the one I want to keep my eye on over the next week in terms of the tech sector. NVIDIA, good old NVIDIA, and something else. I think, what was it, 140 was the high. We got the 3-day pullback. And I think NVIDIA is doing what I kind of expect, much of the market to do. Just kind of to back and fill now for a period of time. Let's see, this thing, from a time perspective, very similar. We're banging up against the averages. Could it take off again? Sure. I don't anticipate that's going to be the case. I think it's going to back and fill, and that's why I think trying to find other leadership in the market is important. I tend to think that's going to come out of the financials. Let's see. Anything else on NVIDIA? Yeah, I don't think. I think basically this, just under basically 140, 120 range is going to be the story for NVIDIA for quite some time. Their earnings aren't until the 28th of August, so that's an eternity. Whether we can, break out of that, 118, 140 range, remains to be seen. And let's see. We have, this was the June 20th. It was that big reversal day. I just want to, reference that in some of the other charts, that we look at. Microsoft, let's see, June 20th. There's June 20th. Did not impact Microsoft the day you had that big reversal in NVIDIA. Broadcom, on the other hand, here is, what I thought, and I don't pull this chart up very often, but it certainly had a monster move out of the earnings. And, whatever, it's 1,700 now. It's a hell of a state one out of October. Again, then we went sideways and got another, state one inside of, a couple weeks in advance of the earnings. And let's see, we got, there's the 18th, kind of, and I don't know if there's any parallel, but it was interesting to me that, Broadcom, topped out a couple days in advance of the NVIDIA's June 20th reversal. So, just something I'm keeping my eye on a little bit, just the whole Broadcom, that this thing, on the 20th was quite a day, and, Broadcom, turned out topping a couple days in advance of that. Let's see, one more, I think here. Okay, yeah, just so rolling over into another area that, could we find leadership in the transports? Not out of the question, although they look like, I think they're just going to range trade. Let's see, IYT, and we've talked about this before. It is, it's Uber, it's Union Pacific. They're the two biggies, close to 20%. And then, you drop down to about 5% in FedEx. And, there's FedEx. I think we all, we know they had monster earnings. Stock, had a monster jump, but you didn't get anything out of IYT, with it being just 5% of that index. So, I do think, IYT, something to keep an eye on. If we get some unexpected strength out of that, maybe we find some market leadership. I did want to just pull up, a couple of the index. Here's the sideways market. I mean, and, I think United Healthcare, their earnings are the 16th. That is the biggest component in the Dow. So I think that's something to keep an eye on next Tuesday, just to see what kind of earnings United Healthcare has. They're looking for 671 versus 614, and they're looking for, not an insignificant, about a 5% increase in revenues at $98 billion. So that's next Tuesday. UNH might be something to keep an eye on, but the Dow's, much like Russell, just kind of, well, I shouldn't say that. Russell's in its own world. I'm just saying it's a little bit like Russell, only because it's been sideways, but not nearly as stagnant as the Russell. I mentioned the materials earlier. They just roll into a state 4, and they get a natural retracement here. You get stuff like Sherman-Williams and some other fairly nondescript components in this index, and I think it may bear watching. I mean, the overall economy seems to be a touch softer, and so it's an area where the stocks just kind of back and filled a little bit. And then an area that really hasn't back and filled certainly would be the semis, and Dave tracks these real close. I will pull up the MU chart because we had earnings, right after our last meeting a couple of weeks back. But this thing's been on a tear, worth watching, and we still, are we going to get multiple expansion? I don't think many of these earnings are for a little while. So whether it can make a new high. Sure it can, but I would guess if it's going to move, I mean, the distance above target 3, I mean, we can go further, but I got to believe any rally would be muted, in this area. Here is Micron, and I think that is only about 5% of the SMH. There are the bigger ones are NVIDIA's at 20. You got Taiwan Semi at 13, Broadcom at 8, AMD at 5, Intel at 5, and Micron about 4% of that index. So I guess the play here is does this 127 level hold, and does this thing kind of just trade in a range over the next month or more. Let's see. Yeah, I mean, Dave may have some insights. Yeah, Dave.
Yeah, that's why I had the Micron slide up there. Like I mentioned, I listened to that 2 or 3 conference calls every quarter, and because I tie Micron into the AI theme, and if it's a theme or not a theme kind of thing. And that particular company, they have their high bandwidth, kind of like the premier memory package that they sell, sold out all the way through 2025. Kind of like NVIDIA's got their GPUs sold out for another quarter or 2, I believe. A lot of these, not a lot, but some of these semiconductor companies, the high performers have actually sold out everything they have to sell, which is why they have pricing power of, incredible, incredible pricing power. That said, there's other competition brewing. We had a lot of money thrown at the CHIPS Act, and the beneficiaries of that money are companies like Micron and Intel that are actually building more fabs. To the Micron chart specifically, the stock didn't move up, even though they had pretty good forward guidance going out several years, because they're building fabs. And investors don't particularly climb onto stocks when they're starting to build out new factories. I think that'll be a kind of a challenge for all the reshoring manufacturing companies as well. So, but there's a lot of money that was thrown into the CHIPS Act, and that's going to support a lot of the capital CapEx layout that some of these companies are having to put out. So it's you have to kind of like be a little bit patient on your returns if you're playing certain stocks, especially ones that are building out. Now the semis, like you said, have been in kind of a tear. Getting back to the Broadcom and Apple, I think those 2 stock prices have gone up significantly just because they've been touting new AI coming sometime in the future products on an edge device, which I question a lot, but we'll see if new iPhones are really all that much better because they have a better digital assistant coming out with them. We'll see. But the stock prices have certainly increased just on the ifcom of, there's going to be better AI for edge devices. Again, I'm kind of like, I would be against that thing, but we'll see how it plays out.
Well,
So, okay, so I'll stop there, but the semis, I think, are kind of like gonna not go too much farther into the election because most of the semis that go into products have already been created. So just buying those, you know, consumer electronic manufacturers for Q4, perhaps. I don't know that they're going to make a whole lot more than they're already making. TSMC and Intel are the two fabs to watch as far as how the future is going to pan out. TSMC just released
well,
a good. I don't know. Did you put up their chart? I came in kind of late. I didn't know whether you had their chart up there or not.
which one?
But TSM for Taiwan
I did
Semi
not.
TSMC. They and ARM, the AI theme is like people are saying, well, what to buy AI? And they're buying the hardware. Well, AI is software, but all the hardware are enablers. So we'll see. It'll be interesting to see how NVIDIA pans out to the next 2 quarters.
Indeed, it
So
will, and appreciate your detail. You spend a lot of time in this industry, and you know better than I. I mean, look at the run that back to MU. I mean, it had a hell of a run, and multiples can only expand so far. You stretch the values, and then you back and fill for a while. And I think that's what we're looking at, and I think that's what we're looking at, personally in a lot of the markets. But anything else to add there, Dave?
no, thanks. I'm sorry. I kind of rambled for a little bit on several
No,
stocks. I didn't need to do
no, we're
that.
good.
Sorry.
What that the big bearish engulfing candle in NVIDIA, was June 20th. It was June 18th on Broadcom. But just the parallels, I think, are interesting. Here you are in Micron. Same day. NVIDIA got crushed, and that was before the earnings. So, and that's where you get back to your channels, whether it's the Bollinger Bands or the Keltner channels, distance above various moving averages. We get to extremes. If you're trading options, and you get to some of those extremes, selling call spreads, buying put spreads, doing a covered call, they're the types of strategies when we get to these extremes. And then, always going back to, as Josh points out all the time, the various targets and how, target 1, 2, and especially 3 can sometimes act as significant resistance or support when things, plow through it. So, but back to your comments, Dave, I think Micron's comments about, forward-looking good guidance is extremely constructive. And, it obviously helps to support these expanded multiples going forward. So, and, I really do think we've had these big runs. I think the market, as I've said more than a couple times already, we're sideways with an upward bias, and the market's looking for a catalyst. I don't think the catalyst is coming out of the inflation numbers at this point. I think they're kind of just expected, and don't seem to have any real outliers there. So, bring on earnings, and the next 4 weeks, with earnings, are going to be a lot of fun to see what kind of reaction, these stocks have. And that's why, Friday to me is a big day. What are the numbers? But then more importantly, how does the market react to those numbers? And I think we're going to have an awful lot of insight into the market after the financials, come out on Friday. Sticking into the semis, though, I just thought, I'd pull up Intel, and it's a whole different animal, as Dave said. A lot of this stuff, and the government money that'll be coming, and I know you had talked about it before, Dave. That's stuff way down the road, but Intel's had a pretty good pop here, in the last week or so. So it's one to keep an eye on. Obviously, the state 8 got reversed in a 7 here, and it'll be interesting to see, what lies ahead. Intel's, let's see, their earnings are the 25th. So same day as Union Pacific on the transport side. Long way to state 1, whether it's a state 8 or a state 5 next, looks to be a coin flip. So, but Intel, with it bottoming out like this, in the last few days, I think a pretty good chart to keep an eye on. Let's see what else. And another one, Delta Airlines. It's in a state to it, not doing much, but their earnings are also tomorrow, and that would be just a one-off. And these airlines are all over the map, but from a leadership standpoint, it's one I'm going to keep an eye on just to see whether they can possibly surprise with some better numbers and maybe some money starts to flow into that area. So I think chart-wise, that's what I had. Let's see. We got a mixed bag in terms of the sectors in our states. A while back there we were all state 1s, but we're rotating through various states, but the market basically continues to chug along, basically to the upside. So I think that's it. We got on the political side, the Republican convention starts next week. We have the inflation numbers tomorrow and Friday. I think core inflation they're looking for around, I think it's 3.4 up 0.2 month over month, where the producer is lower at around 2.4% and maybe up 1 or 0.2. Retail sales next Tuesday, given the the quote unquote slowing economy and some of these stats, next Tuesday's numbers may be fairly important, along with Wednesday's housing numbers as well. So some weeks we get through without a whole lot of government numbers, but the next week is not bad. So that's what I had. Anybody have any comments or questions?
Yeah, Joe, Dave, again, one more comment on earnings that are coming up, because I was thinking about the strategy or the theme to maybe look into for this time of year, this quarter. So we're in late summer. Not so much trading is going on. Q3, the fall quarter, is usually a down kind of quarter. So particularly, I'm actually looking at like iron butterfly type trades for stocks that are right up for the big tech that's near all-time highs now. You mentioned it before. Well, what are the catalysts for moving a lot higher? No, not a whole lot. What are the catalysts for those bigger companies, having headwinds? Probably not much, in my opinion. So that's a strategy I'm going to look at with the stocks that I kind of qualify as already at all-time highs with, where are they going to go? Well, they might not go a whole lot on earnings day. So that's one thought. The other comment that I wanted to make was following up on following the money, which is what I had a poor job trying to explain in my previous or comment section there. But the other places that money is flowing, look into electricity for individual stock plays. One area I might suggest is look at anything that creates or connects electricity to the grid. We just threw a lot of money into nuclear. If you haven't caught that, there was 2 big policy statements that came out since the end of June. One was we decided, actually all the NATO countries kind of had to throw into this, but nobody's going to buy uranium from Russia anymore. Yet I think it's called the Advance Act, or there's specific money thrown towards the nuclear industry and to help jumpstart that industry. I think it's called the Advance Act. But anyway, for example, pull up a chart called SMR for me, would you? I want to just show
Yeah,
you, this is, I wanted to sort of try to describe the time lag between money allocation, money spent, and then, profits generated kind of thing.
SMRT or just SMR, Dave?
Just SMR, just SMRs. Do you
We
not
don't
have
have it.
SMR?
We do not.
Oh, okay. Never mind then. You won't be able to do it. But okay, so anyway, let me just tell you about that. Uh, it stands for small modular reactors. And it actually, one of the companies that's trying to, these are small reactors and there's not any of them built yet, but it's uh, it's a solution for all these high electricity consuming data centers, Bitcoin miners, the guys that are gobbling up electricity by the boatload. They're gravitating towards buying their electricity from utilities that have nuclear power plants, or they're taking over the data centers for the nuclear power plants to for the data centers for the mining, the Bitcoin miners, or the big data centers that Google and Microsoft, all these guys are building new big data centers, right? Lots of them. That's where their CapEx is going. So if you follow the money, look into the stocks that are in the industries where the money has been allocated to, but hasn't yet been spent. I mean, there's a process for CapEx. I used to work for General Dynamics, and every year there was a big fight for the capital, and so that was like created the budgets for what you could go buy the next year. So all these policy, big, oh, we spent all this money. Well, we haven't spent a lot of the money that Biden allocated for a lot of the projects that he wanted to help get started. He's allocated the capital, but they haven't spent the capital yet. They're just starting to give out that money to the various companies that are involved in those industries, alternative energy type companies, for example. So now they're just starting to spend the money, and now companies are actually using the money that's been allocated that now they can go get to actually build facilities. But there's a lag time between building the facilities and earning revenue and whatever from products that you're going to build in your new facility. So I'm just saying, watch the time lag in the future. I think there's a lot of construction going on in a lot of under the radar companies, and you're going to find them not in the Qs, you're going to find them in the Russell, in my opinion. So stocks in the Russell are going to be the ones that explode once we start to get any kind of rate cuts for inflation rate cuts. That's where I would look to see individual stocks. If you're a picker of stocks, look in the Russell and start planning for when the first rate cut's going to be. I think it's probably going to be after the election. There'll probably be one this year. There'll be a lot of pressure to make one cut, no matter who wins. If Trump wins, he'll want to cut right away. Maybe a lot of cuts right away. If the Dems win, and I don't even know who's going to run for the Dems, but if they win, you'll see more of what you've been seeing. And they're going to argue for rate cuts for the companies that are trying to break out in the small caps as well. So that's where I would look for, thinking long term in the future for your long stock picks. I'd say look in the Russell more than look at the big companies that Microsoft, Apple, all the big ones today that have been in play since they stopped raising rates, right? How long has it been since we had a rate change of any type? What was it, 2022? When was the last rate hike? It's been quite a while, right? Anyway,
It has been.
follow the money. Follow the money. That's a lot of people hear that theme a lot. So where's the money been allocated? Has it been spent yet? And what are the companies there? Intel's going to make a comeback in a few years, mark my word, but they're not investable right this minute either.
Right.
Anyway,
it's
sorry for yapping, but that's
no.
people want to know what to think about. I'm just
No.
trying to give you some ideas on where you might look.
And if, you come up with a few, Dave, that, you want to share with everybody, we're happy to do some analysis on them, and we can talk option trades, whatever you think. But hey, following the money is never bad advice. But thank you. Anybody else?
Dan here. Can you hear me?
Hey, Dan.
Yeah, hi, how you doing? Just piggybacking on what Dave had to talk about. I think he's spot on as far as what he just mentioned. I was reading about how the through the CHIPS Act that's funding a lot of fabrication plants that are being built here. In particular, Taiwan Semiconductor, they're building here, and they're building out in the desert somewhere. I forget exactly where it is. And it's just a massive endeavor. The problem that they had with it requires lots of water, and where they are, there's not a lot of water. So I guess they're trucking it in, and they're trying to figure out a better way to get water to the construction sites. But as far as the electrical power, that's going to be a huge problem. That's why I think you're going to see a lot more talk about nuclear power in this country, actually all over the world. I think a lot of areas are going to go to nuclear power because the amount of electricity that these data centers is so huge that it's on the magnitude of what countries use. Whole countries use what these data centers are scheduled to be using. So yeah, that's definitely something to keep an eye on.
Thank you, Dave. Appreciate it. There is Taiwan Semi. It, of course, has been one of the strongest of the group, well beyond target 3. But yeah, maybe, going forward, if we find some of these companies that, we want to talk about as a group, let's not hesitate to do so.
Yeah, Taiwan
Thanks,
Semi. Taiwan Semi, our government wanted to move the plant here, so that's why they're building, because Taiwan Semiconductor makes chips for our military, for our aircraft and tanks and everything. And if anything ever happens, if there's a war, it'd be devastating to our military if they couldn't get the chips. So that's why they want to start bringing everything back here. So I can see that happening. There's a strategic reason why, very important reason in my book, but.
Right. Thank you.
Yeah, thank you.
Anybody else? All right. Well, as always, thank you for joining. Josh will be back next week. He's on the road. One of his daughters is a big soccer player. I think he had a 14-hour drive, to get his daughter to the soccer tournament this week. So he will look forward to being back with us next week. But thank you all. Have a good week, and we'll talk to you next Wednesday.
Thank you.
Thanks, Jeff.
Thank you.
Thank you.
Bye-bye.